Hello, this is the tradesight stocks and futures index preview and U.S. economic data roadmap for the week beginning Monday, the 15th of July and ending Friday, the 19th of July, 2013. Charts as usual provided by the upstanding eSignal 11 package. Here's a look at the S&P daily chart 500. This is that blue trend line we were following for a long time that we broke under back here late in June, and we talked about the fact that with the 4th of July holiday, they might get off to a slow start, and they did last week with the holiday being on a Thursday, but that usually beginning of the third quarter we do see a move in the markets. And there it is, we have moved strangely up. We are now retesting exactly that line, so it's going to be interesting to see what happens. That's going to be the biggest thing we're going to be watching this week, is what happens with the S&P on that level. That's going to be important. Get back above it certainly is interesting. Not much of a breakdown in the market once we lost that level. So here's the NDX, NASDAQ 100. New highs for the year, closing out Friday, and a big week, although a lot of it was that gap up Thursday morning after Bernanke's comments, almost 40 points there. But overall we did have solid gains for the week, and I'll show you what that looked like intraday. The intraday action was not good. Volume was not good as well. We had 5 out of 5 volume warnings. That means less than 400 million NASDAQ shares after the first hour's play. So that's the disappointing part, but the rest of it was certainly decent, and we certainly had a nice trading week in general. Nothing to complain about in terms of the results of the week. Just kind of an unusual deal when you've got volume that late. Out of 23 of our stock trades that triggered this week with market directional support using our tools, 18 of them worked in some format, some of them very, very well. So can't complain, but hopefully we'll get more volume here soon as well. Let's take a look just at some of the others. Here's the SOX, the semiconductor index, to new highs, testing that risk line from the 13 seeker sell signal that we got back middle of June. Here's the biotech index shooting, catapulting, I would say, to new highs. Big day on Friday. Google breaking out of a nice cup formation, although it is 9 days up. There are some announcements expected out of Google here in the next few days, including at least a new Nexus 7 tablet and probably the Motorola X phone that's rolling out in August. We're hearing August 23rd as a date for that. Apple, pretty unexciting this week. Been flat around that 420 level now for 6 or 7 days. So not much to report there. Amazon, boom, new highs on Amazon. Look at that big move. And Netflix, another one that we track, basically broke out of a nice base formation today on Friday. This is, though, you'll notice, 9 bars up. Let's take a look at the intraday action during the week. This is 10-minute bars on the ES. And you can see this is what it looked like. So we had, this is Friday's close last week down here, gapped up Monday, and a very flat day. We ended up closing right where we started. So again, even though the S&P tacks on 8 points there, really wasn't in terms of 8 points of upward trading or 16 points of range to get there. It was a gap up, small push higher, back to that level and close there. Tuesday, another day, gap up. So we've been once again, even though we tacked on another 8 points on Tuesday, almost all that was the gap. Here was your open, closed at the same price. Unbelievable. Wednesday, we finally had a flat open, and we were really doing nothing at all. Volume was poor until the minutes of the last Fed meeting came out, caused an initial spike and then a roll, and ended up right back where we started. Not really a very exciting session there either. Volume was light all those days. Then Bernanke gives a speech before the next session, and here we go, gapping up considerably, almost 18 points or so in the S&P, and we did push a little higher in the afternoon. And then Friday, just horrible trading volume. I mean, absolutely horrible trading volume. We ended up at 1.4 billion NASDAQ shares on Friday for the close. So that's just really bad, and you can see the action was poor until the last 20 or 30 minutes or so. We suddenly get a little bounce up and again retrace back to the exact opening level. So basically 1, 2, 3, 4 days of the week we closed where we opened, and one day we pushed a little higher. That was Thursday after a big gap. And yet somehow with all of that, the S&P adds 44 points, 42 points for the week. Not exactly great for what you want to see from a trading perspective, but certainly great if you're an investor in the market after what we were afraid was going to happen here. But this, again, is why that S&P level is going to be so important on that trend line. Now, here's the NDX, NASDAQ futures. A little different story here. Gapped up Monday morning, pulled back, a little more negative. Gapped up Tuesday morning, closed about the same. Gapped flat. Opened flat on Wednesday, but it was a little stronger. And this one was way stronger on Thursday from the gap up and kept going Friday as well. So we end up gaining 100 and about 110, we'll call it 100 points on the NASDAQ 100 for the week. But again, a lot of it in this one big gap. So, it wasn't a bad week for us from a trading perspective, just a little bit unusual the way that it played out. What are we focusing on the week ahead? We're going to go through the economic data here in a moment of what's coming out, but this is options expiration week for July. So because of that, Wednesday is the most likely day to have the options unraveling move, which we train people on how to look for that and spot it and utilize it to make money in the markets. And if you don't get it Wednesday, you'll probably get it Thursday at the same time. Friday is going to be really dead. It is options expiration itself. There's probably, and based on the fact that we've had so little volume, there's really no reason for Friday to be exciting with options expiration this week. So I'll be trading probably the first 90 minutes on Friday and then done. One of the great benefits of trading for a living. When it's going to be slow, you don't have to hang around. Let's take a look at the U.S. data that's coming out. We've got retail sales and Empire manufacturing data and business inventories Monday morning. None of that's super huge. Tuesday, we've got the CPI data. That's a big one. Net long-term tick flows, industrial production, and capacity utilization. That's all before the bell, and then a housing market number 30 minutes in. Wednesday, the NBA mortgage index, housing starts and building permits, crude oil inventories, and the Fed's beige book in the afternoon. Thursday, initial and continuing jobless claims, Philly Fed, that could be a big one. Leading indicators can also be a big one. Natty gas. So here's the thing about this week. We always know that Tuesday, Wednesday, and Thursdays are the more likely days to see action in the markets. Looks to be the case here. There's no data on Friday, and it's options expiration. Friday's probably going to be just about a write-off. Monday, some minor data early. It is a Monday. That's not the bigger trading days. But on the institutional days, the days where the funds do the most movement, Tuesdays, Wednesdays, and Thursdays, CPI, industrial production, capacity utilization, that can certainly get you going on Tuesday. Wednesday, it's not so much that there's some great data, but Wednesday is the most likely day for that options unraveling move. And if you don't get it then, you certainly got Philly Fed and leading indicators and potentially the options unraveling move on Thursday. So there's a lot of room for this week to be decent in the middle of the week. We are at a critical area once again on the S&P. So it's going to be interesting to see what happens. Definitely looking forward to the trading week. We hope it ends up being as good as the last one. And we will leave you with that. Let's also, actually real quick, let's take a look at the the earnings calendar that's coming up here for the next couple of weeks. Let's see, this week, next week, we're going to take a look at this. Because we're about to enter the core 8 days of earnings, but they're kind of been lagging. It's been a little bit later in the month than it used to be because a lot of companies take a little longer now to get their earnings rolled out and reported. So if I can get this to come up, we will take a look at what's due out in the week ahead. And for whatever reason, the briefing page is being a little slow. There it is. All right, so for next week, Tuesday after the bell, do we have it? Interactive Brokers, no. Yahoo's coming out next week. So really, it's going to be the core 8 days of earnings. Oh, no, it will be this week. So it starts on Tuesday. So Tuesday, Wednesday, Thursday, and then Friday there's a lull. The following Monday is a lull. And then Tuesday, Wednesday, and Thursday of the following week as well are the core 8 days of earnings. Companies reporting, the bulk of companies reporting from their Q2 earnings starting this Tuesday and ending the following Thursday. And that does mean a slightly different environment for us because obviously stocks report earnings. You get a lot of rumors moving the stocks late in the day. You get gaps in the morning because of stocks themselves or other stocks in their sector, and we have to be aware of all that. So it's a slightly different environment for those 8 days. But again, let's focus on the middle of the week because I think it could be a real nice trading week. And as usual, we will be around in the Trading Lab to guide you and help you make money. Have a great weekend, and let's see you next week in the Trading Lab.